What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about into this video is AUD CHF. Now, why do I want to speak about AUD CHF? Because this pair is very near to providing to us a good trading opportunity. So I want to give you guys a full breakdown of the situation that we currently have on it to show you where we can be looking for the next potential opportunity. And as usual, I will be keeping this analysis as educational as possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing both on the AUD and on the CHF. And by the end of the video, by using the combination of our order flow analysis and our technical analysis, we will be able to understand where we have the highest probability set up here on AUD CHF. Now, starting from the monthly time frame, what do we have? Now, here in the monthly, we can see how the market has just provided a strong impulse to the upside. Now, generally speaking, after an impulse, what you expect is for the market to provide a correction. And we can see how the market has already started providing a correction, printing the first red candle after quite a strong impulse to the upside. Now, if we look left, what we can see now? By looking left, we can see that all this area is very strong structure for this market. Specifically, it is a historical structure level for this market. In fact, it was acting as very strong support here, again support here, again support here, again support here, again support here, and again support here. And we can see how the market at the moment has just broken back above this level. So all this previous support is now turned once again support at this area, and we can expect the market to test and reject this zone to the upside. So here on the monthly time frame, everything is quite clear. We have tested multiple times a very strong structure support level, and we do expect the market to create once again a rejection to the upside. Going down on the weekly time frame, what do we have? Now here in the weekly, we can see that in all this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here, meaning that this red candle is actually a quite strong demand area for this market that we did expect the market to test and potentially reject to the upside. So there is definitely the possibility here on the weekly time frame to see a deeper and stronger rejection away from this structure. We can also see that in all this impulse to the downside, there is one candle which is not related to the move, which is exactly this green candle here, that we do expect this market to create a correction to. So here in the weekly, everything is quite clear. We have an M pattern, which is again a bullish pattern, that still needs to be completed, and the completion zone is this green candle here, and we are also testing strong demand. So there are multiple confluences showing that there is a very good probability for the market to reject this area to the upside. Going down on the daily time frame, what do we see now? Here on the daily, we can see how the market has just provided an overextended M formation. We can see how we had the move to the upside, retracement, move back up, and then the market melted to the downside. Now, if you have a situation like this, after an overextended M formation, what you expect is for the market to provide a correction at least to the 0.382 of the Fibonacci taken on the impulse leg. So obviously in this case, we expect the market to provide a correction at least to the 0.382 of the Fibonacci taken from this high to this low. But overall, there is even the possibility to see the market go all the way back up to complete the pattern at the neckline, which in this case is this previous support turned resistance. If you have any requests for other breakdowns, make sure that you leave it in the comment below, and also make sure you like and subscribe. So up to this point, what we have seen is that the monthly, weekly, and daily timeframes are all showing a potential move to the upside here on AUD CHF. Now, if we go and see what we have from a COT perspective, so commitment of traders perspective, which is what hedge funds are currently doing in the market, what we can see is that with the last report, hedge funds have once again increased their net positions. In fact, we went from having 5.9k net positions all the way up to having 12.2k net positions. And we can see how we added 7.5k long positions with the last report, reaching 66.6k long positions and 54k shorts. So the AUD is actually getting quite strong. And if we go and see what we have on the CHF, what we can see now on the CHF, we can see how net positions have been decreasing and decreasing and decreasing. In fact, we went from having 15.8k net positions all the way down to having 4.2k net positions. So overall, what is happening is that from an institutional perspective, hedge funds are shifting to the bullish side of the AUD and to the bearish side of the CHF. We can see, in fact, here how on the CHF, we went from having 23k long positions to 16k, so longs are getting decreased, and long and shorts, are getting increased from 8.6k to 11.8k. And on the AUD, exact opposite. We went from 59k to 66k long positions, and shorts are getting decreased from 63 to 54k. So AUD is getting strong from an institutional perspective, and CHF is getting weak, which is exactly what we need for this market to complete this overextended and formation to the upside, as we have already identified from a technical perspective. So how we can be looking for this potential longing opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes for the directional aspect of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour and lower bearish market as we have right now to a 4-hour and lower bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point, we will be adding AUD CHF to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this M pattern at the neckline, which is this previous support now turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates. For all of you, you can also comment below and let me know which pairs you would like me to cover in my next videos. Also, make sure you go and check out the mentorship program. It's a very complete program. The link is in the description. First, you get all the rules of my rule-based strategies, and then you trade the strategies with me. Each and every day, you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as having me answering all your questions every single day, including the weekend. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.